What we're going to do, we're going to start like we do every week. We're going to start with looking at what happened in the previous week. We're going to look at the indices, and we're going to plan our trade. But in summary, if you remember from last week, the basic plan was we were looking at the Japanese yen being on the in the beginning of a bear market, and you could see the basic capitulation that came in from that happened last week. All what we had is on Friday we had this kind of a pause. Friday has been but we had a very good follow through all week on the yen, and the yen index still is pointing to the downside, and we should be looking for a test of the 119.15. We have right now, with regards to the yen, we do have an interim trend change to the downside. It's beginning what you can call a bear leg to the downside once it broke the 126, and this is quite about 500-600 pips to the downside, so we should be looking for the yen to continue at least to test the 119. But the surprise for the week was the US dollar, and I have been looking around to see what happened on the dollar. We had the day before, the day before Thanksgiving, we had kind of a negative day, or a slow day, or a pause day, based upon the being a holiday here. And then on Friday, you can see this capitulation. This is quite a big move. I mean, the low of the previous day, of Wednesday, if you will, the day before Thanksgiving, was 80.94. This is about a 100 pip move, and I mean, there is nothing. I haven't seen anything. No news event, something happening that would instigate this kind of move, other than what I would assume to be a thin market or something. We had a move to the upside in the euro, and you can see that this is pretty much the upside down of the movement that was of the chart, of the dollar chart, if you will. If you look at this candle here, and then there is the holiday, or the market was closed in the US session, and then you got the explosive move to the upside. If you look at the dollar index, it's pretty much the upside down. It is the inverted of the original green, and then you have the gap and the capitulation. This is very uncommon, let's put it this way. Usually when something like this happens, it's usually a major event that took place, something, but it has affected the. Again, we have to respect, we have to trade what we see, but it's quite amazing. And if you look at the Australian dollar, pretty much continuing its narrow range with the bias to the upside. If you look at the Swiss franc, pretty much the upside down of the identical to the euro, the same candle, and then the inverted candle, and then the explosive move, but it is not as strong. If you can see here, You see this close? It went and tested this high, which is the last momentum high, which is the 108.38. This daily high is 108.37. It's pretty much identical. It did go up and touch it, and then it pulled back to the 108.86, 107.86. But the euro, the close is much more stronger in the euro than the close that is in the Swiss. But as you recall, when we were discussing the euro and the Swiss last week, one has given us a trend for a structural failure sell signal, which was the euro right there, while the Swiss just gave us a turtle soup, if you will, because of this high. So right now this is considered quite a big price acceptance zone, and we're just coming back here to test the previous momentum high. The Swiss and the euro, assuming if we take the movement, that the decline that happened in the dollar as a bona fide move, which we have to use, we have to take the close on Friday with a big grain of salt. So we're going to apply, in this case for the US dollar, we're going to apply in this case, the big range day rule, because again, it is a major holiday, it is a week, there is no news events, there is nothing that would justify, at least this is a little bit, I love it once we have movements like this and nobody gives me a reason. I mean, it is the best kind of trading when you see something like this capitulating and you get a big trend, and then you go and do a Google search and try to find out why this is happening and what's the story and why the decline, and nobody knows. I did a Bloomberg, nobody really knows. These are the best setups, when you have a move like this and nobody knows why it is either going up or why is it coming down. These are the best, as long as they continue. So the key word here, the operative word, is for it to continue. So we are going to apply the big range day rule just to be on the safe side with regards to the US dollar. We would like it to break below the low of the day, which is 81.15, which is about 7 pips from where we are right now, and we do have a structural point here, which is the 80.31. So if it does, the US dollar comes back above the 80.31, we will definitely be buyers of the dollar, on the assumption that we're going to get some short covering rally, that this liquidation, I mean, whatever, if it gets above the structure point of the 80.31, this means that this move, you want to call it a fat finger, you want to call it whatever, I don't know and I don't care. But if it gets above it, this means that this move is going to reverse and get back to the upside. So I will be a buyer above the 80.31. If it does take the low, which is the 80.15, I'm definitely going to be a seller for the US dollar. So with this, we are going to be negative to slightly positive on the US dollar. It is the dollar, as we have been discussing from before, it is still in a very big bear market. It has begun to give us some structural points to break to the upside, and we need to know if this move is a bona fide move or it is just a knee jerk based upon the holidays. And We will find that out tomorrow. So we are going to be neutral. I mean, when I start with the negative sign, this means I am negative because I trade what I see, what the chart is showing me, but I'm going to be cautious. I'm going to be cautious. If it comes back above the structural point, I'm going to be looking at buying it. Okay? The next one I'm going to look at, which is the easy one, which is the yen index. This, as I said, is in a bear market. We should be looking at selling it. We closed the week at 121.14. The low of the previous day is 121.
Okay, back to the analysis.
16. This is 121.41. This is the 121.16. So we're about 15 pips. So that pause again, that's a neutral day. It is not. It's just a simple pause. We're looking for a continuation, and as I said, the key trigger would be the 119.15, which is the big structural point, and that is, this will be the beginning of what we would call a biggest structural failure, and would be the beginning of a bear market in the end. So that we will be looking at that. So with this, we will be negative. We will be looking to sell the yen. So the yen, as I said, is very weak because it is in a bear market. It has begun to move to the downside. The next one we're going to look at is the euro. And the same rules that we are applying for the dollars, we're going to apply for the euro. This move here is, this setup is actually technically an excellent setup, and if we did not have the slight situation of the Thanksgiving holiday, I mean this would have been an excellent buy signal. Why? Because this is a structural point right there. We did break below it, and we did have the capitulation that we expected. We came back above, tested the structural point. As you see, this high is the 128.36. My structural point is 128.33. So this is actually a perfect test. You break below it, you come back to test it, and then the following day you started at the open of the day is 128.76, and the low is 128.30. So you can practically assume that it opened at the low and then it resumed the way to the upside. So technically this is a brilliant trend reversal to the euro to the upside, and we should be looking at buying the euro. The only reservation, as I said, is the Thanksgiving holiday, that the market was closed. The whole US market was closed, and therefore the market was extremely thin. So what we need simply is verification that this has been a bona fide move, so that we do not So we are going to apply the big range day rule across the board.
Also 1738 from yesterday, from last week holiday. But I think price will be back downside and break this 1720 level.
Give me 1 second. There's a couple of other guys cannot log in. Give me one mistake. I gave the password, the wrong password to James. I'm sorry. Anyway, so as I was saying, what we need to do is to make sure that what we see is bona fide. We never question what we see. This is, again, as I've been saying to you, this is the best technical setup that we ever hoped to be, is having a situation where the market is moving and we cannot find a reason why. This is the mark of the genuine move. When the market is moving and nobody knows.
I will search for my entry long. Entry long back to 1738 and
why it is going up. So with that, what we're going to do, we're going to look for a break above the 129.94. Just for this time, because of the holiday, we're going to apply the big range day rule in the euro, and it's the same thing with the Swiss. The Swiss is slightly different. The euro seems to be stronger than the Swiss based upon the close, because you can see the distance here is quite big. The high of the day was 108.37. This momentum high is 108.38, so it's just pretty much there. But what we need here is this. This point here is. This is the difference between the euro and the Swiss. That 108.38 is a structural point to the upside. It's a structural failure to the upside. So if we do come above it, that would be a structural point, a structural breakout. Now the $64,000 question is, should we wait now for a trade above the 108.37 to buy it, specifically since I have the euro very far away from the structure point. These are the structure, or this is the structure point, this is the significant point. There is at least 100 pips away between where the euro is now at 129.88 and where the structure point is. So if I wait for the Swiss or for the euro to break above here, should we wait for the Swiss and apply the same big range day rule? Well, if we do that and it does come and trade above the 108.38, what's going to happen most probably is that this thing, if this is bona fide as it seems to be, we're going to miss a very big explosive move. It will be pretty much too late to get into the trade, because these are going to be trigger a bunch of stops to the upside. So what we're going to do is we're going to take an early entry for the Swiss. We'll take the entries out of the ranges for the Swiss, simply because of the strength that we have seen in the euro. The euro is the overriding pair in this relationship. So I will be taking a break out of the euro, okay? And I will take an early entry in the Swiss. So the euro is going to be, I'm going to give it 2 pluses. And the Swiss,
South level next year.
I'm going to give it one
That next year we'll see South
plus, simply because it had a much weaker close than the close we had in the euro. If we come to the Australian dollar, this is pretty much the same. I mean, it hasn't. We have been discussing this over the last several weeks. It is technically near an all-time high. The trend is still to the upside. It is pretty much in a bull market. It is pretty much near the high, but it has been moving in this sideways pattern with an upward bias, if you will, for the last close to a year now. So what we need is a clear directional break to the upside. You see also this is the close of the week. It looks like a big range day.
We have first this last week around 17 and 35.
And my high over here
Higher we have
is the 104.46.
above it we have the trend that
You see that?
okay,
And we closed the week. We made a high here of 104.56, and we closed at 104.47. This is a question mark. And the question mark is because we have this structural point, which is pretty much of this area here, which is the 104.46. We did break above it with 10-15 pips, and then we turned around and came back down and closed at it. It's not negative, but it has not behaved as per our expectation. I don't see stops being triggered to the upside. So again, we are going to be cautious with the Aussie. I'm going to apply the big range day rule. So we are going to take it above the high. So the Aussie for us, again, it is doing the same as it does. It is technically strong, but I'm not going to jump on the Aussie unless it breaks above the high. Last but not least is the Canadian.
Generate first the breakout upside this level back to 74 or even higher, and then move downside
All of them, they have flew
even lower.
simply on the Friday.
15, 17, or even lower to 17.06.
And we have the big move which happened on Friday, so we will apply the same. We're going to be kind of neutral to positive on the CAD because we're still technically in the beginning in a bear leg. So unless it goes above the 10099, we're still looking to be bearish on the Canadian, and we're going to apply the big range day rule also. So for the CAD, we're going to be, well, we're going to be the opposite, positive to slightly negative on the CAD. We're not, it is not yet given us a clear direction. So we did the dollar,
The Euro don't take a decision on this that until Monday. I thought they would take a decision earlier. It seems that yesterday they didn't take the decision yet.
the last but not least is the British pound.
Here. My initial things are up to
The British pound is the same. It is oscillating between the two things. It is getting narrower and narrower. It kind of flipped back above the. It's working nicely. I mean, but still, this is quite a big range, though. It's a distress close we were looking for continuation to the upside. So we're going to be neutral to it also.
Just add the next trade setup. Okay.
So we're going to be treating the British pound the same as treating the Canadian. Okay, so the way we're going to play the pairs today. First of all, this is the clear one. This is the clear one that we have to trade, which is the yen. So we're going to be taking the euro and the Swiss, and we're going to short the yen against it. We're also going to take the Aussie yen. We may look at the pound yen and the CAD yen, so we'll be shorting the yen across the board and also with the US dollar. But the first two pairs when buying is the Aussie yen, the Euro yen and the Swiss yen. Then I'm taking the pound yen, the CAD yen and the dollar yen. The other pairs we're going to look at the dollar Swiss and the Euro Swiss. I'm looking for the continuation. I'm also going to be looking at the Aussie dollar. I'm looking for the break because we got 10 pips away from the break. And we're going to take one last look at the British pounds towards the end and see if we have a break to the upside. So we're going to start by shorting the yen across the board, specifically with the euro, the Swiss, the Aussie as the starters, then the pound, the CAD and the dollar, and then we're going to look at the euro dollar, the Swiss dollar, the Aussie dollar, and then we're going to look at the CAD and the pound US dollar. Okay, that is it. Let me save the recording and we're going to get started.